to KLP's Introduction to Taxing Imported Services by way of an Overseas Vendor Registration Regime. This video explains the features of the Overseas Vendor Registration Regime, which will take effect from 1st January 2020. Under current GST rules in Singapore, the supply of services is subject to GST depending on if the supplier belongs in Singapore or outside of Singapore. This means that if the services are procured from a GST-registered supplier in Singapore, their services will be subject to GST. On the other hand, the same supply of services, if procured from an overseas supplier, would not be subject to GST. As such, to standardize the GST treatment of procured services, the Overseas Vendor Registration Regime will be implemented from 1st January 2020 to tax B2C digital services supplied by overseas vendors to customers in Singapore. The new regime will affect overseas suppliers making sales of digital services to customers in Singapore, an operator of a local overseas electronic marketplace supplying digital services to customers in Singapore on behalf of suppliers and merchants, a consumer in Singapore making purchases of digital services from overseas suppliers and electronic marketplaces. First, in order to understand the new regime, we must understand certain keywords in this guide. B2B stands for business-to-business transactions typically made by a GST-registered person, including sole proprietors, partnerships, and corporate bodies, to a GST-registered customer. B2C stands for business-to-consumer transactions, typically made by a GST-registered person, to a non-GST-registered customer. Digital services is defined as any services supplied over the internet or other electronic network. The nature of the services supplied must be essentially automated with minimal or no human intervention and is impossible without the use of information technology, for example, subscription-based and licensed content, as well as electronic support services. Electronic marketplaces is defined as a medium that allows the suppliers to make supplies available to customers and is operated by electronic means. The main ruling of the new Overseas Vendor Registration Regime is that suppliers belonging outside of Singapore with a global turnover exceeding 1 million Singapore dollars, making B2C supplies of digital services to customers in Singapore exceeding 100,000 Singapore dollars are required to register, charge, and account for GST. Overseas suppliers and local or overseas marketplace operators, collectively known as overseas vendors, may use IP addresses and credit card information to determine if their customers belong in Singapore. Registered overseas vendors must apply for GST to their supplies of digital services only if their customer is not GST registered. In other words, the overseas vendor must charge and account for GST on the supplies made unless the customer provides their GST registration number. If the registered overseas vendors come across a customer who is GST registered, the GST-registered customer will perform reverse charge on these overseas purchases if they fall within the scope of reverse charge. In the event where GST is wrongly charged to a GST-registered customer, the customer should contact the overseas vendor to obtain a refund instead of making an input tax claim on the purchase. The overseas suppliers and overseas electronic marketplace operators will be registered under a pay-only regime with simplified registration and reporting requirements. This regime and the appropriate rulings will take place from 1st January 2020. For more in-depth information, advice, or queries, please contact our professional tax consultants.